Should Canadians be investing in the stock market right now, in 2026? With everything going on, interest rates, housing prices, the cost of groceries, political uncertainty, a lot of Canadians are sitting on cash, watching the market, and asking themselves the same question. Is now the right time, or should I wait? Let's break this down properly, because the answer might surprise you. First, let's talk about what most Canadians are doing right now. According to recent data, Canadians are holding record amounts of cash in savings accounts, trillions of dollars sitting on the sidelines, earning maybe 3 or 4% in a high-interest savings account, feeling safe, feeling cautious. But here's the problem with cash. Inflation in Canada has been eating away at purchasing power for years. If your money is earning 3% and inflation is running at 3%, you are not making money. You are standing still. And if inflation ticks higher, you are actually losing money in real terms, slowly, quietly, every single year. That is the hidden cost of waiting. Most Canadians do not see it because the number in their account does not go down, but what that money can buy absolutely does. Now let's talk about the stock market. The fear is always the same. What if I invest and the market crashes the next day? What if I lose everything? It is a real fear, and honestly, it is the reason most Canadians never start. But here is what the data actually shows. Over every 20-year period in the history of the North American stock market, a broad index investor has made money every single time. Through recessions, through wars, through pandemics, through housing crashes, the market goes down, then it goes up. And over the long run, it has never failed to recover. That is not a guarantee. Past performance does not predict the future, but it is the most consistent pattern in financial history. So why do so many Canadians lose money in the market? It is not because they invested. It is because they tried to time it. They bought when everyone was excited. They sold when everyone was scared. They tried to outsmart a system that punishes that exact behavior. The Canadians who build wealth do the opposite. They invest small amounts, consistently, every paycheck, every month, through good times and bad. This is called dollar cost averaging, and it is the single most important investing strategy for the average Canadian. Here is how it works. Instead of trying to figure out the perfect moment to invest a big lump sum, you put in a smaller amount on a fixed schedule. When the market is high, your money buys fewer shares. When the market is low, your money buys more shares. Over time, you end up with a much better average price than someone who tried to time the perfect entry. You do not have to predict the market, you just have to participate in it. So here is the framework, 4 steps, for any Canadian wondering if now is the time. Step 1. Make sure you have an emergency fund, 3 to 6 months of expenses in a high-interest savings account. That money is not for investing, that money is your safety net. Step 2. Pay off any high-interest debt first. Credit card debt at 20% interest will destroy any return you make in the market. Get rid of it before you invest a single dollar. Step 3. Open a tax-sheltered account. Use your TFSA before anything else, then your RRSP if it makes sense for your tax situation. Pick a broad Canadian or global index ETF. Something simple, something boring. Step 4. Automate it. Set up automatic contributions every payday. Then stop checking your account every day. The market will go up and down. Your job is to keep buying. So, back to the original question. Should Canadians be investing in the stock market right now? If you have the foundation in place, emergency fund, no high-interest debt, a long-time horizon, then the answer the data supports is yes, not because the market is guaranteed to go up next week, but because waiting for the perfect moment is the most expensive mistake Canadians make. The best time to start investing was 20 years ago. The second best time is today. If this video helped you, hit subscribe. New Canadian personal finance videos every week. I will see you then.